Hi everyone, my name is Alex Wyatt. I am from simplyvat.com and today I have Louise, our VAT researcher from Simply VAT, joining us, and we are going to be covering a kind of a live Q&A all about answering your questions leading up to Brexit, or rather the end of the EU transition period. So if you have any questions throughout throughout the live Q&A, please pop them in the questions box on the side of the screen here, and then I'll be flicking through them. Now, I want to put a big disclaimer here because obviously we don't know each of your individual businesses, right? This is quite an overview session. So if you can either provide a bit of context or anything that we kind of say is not going to be specific advice to your business, because again, we don't know your supply chain, we don't see the whole picture, but we can give a general overview of the changes in legislation and what's going to happen, so you can kind of start to prepare. So that's something to keep in mind as you're asking your questions today, is make sure that either that they're going to be a bit more broad answered. Now, if you want to find out more specific information for your business, then feel free to inquire to us. So we popped a link in the description to contact our team, or you can give us a call, schedule a call, and we'll be able to kind of walk through the different changes. And we also have loads of resources on our website. We have a whole Brexit page. We had our Brexit bootcamp that we hosted back in September. Louise did a presentation of the overview where it went nice in depth of the changes. So today is going to be quite a high-level Q&A, but if you want further resources, please let us know or get in contact with us directly. So pop a little hello in the box there, just to say hi, so we can see that you're here. So we have a few people saying hi already. We have a question already. So great to see you guys here. And so, hi Louise, I'm going to say hello to you.
Hi Alex. Hi everyone.
So Louise, actually, you're joining us from France today, aren't you?
Yes, absolutely.
So Louise is going to, do you mind giving us kind of an overview of what's going to happen at the end of the EU transition period?
Of course, yes. So as you may know, the end of the transition period is set at the end of this year, of December the 31st, 2020. There hasn't been a free trade agreement agreed on between the UK and the EU. You might see on the news, there's a lot of talk about it right now as we speak, because obviously the deadline's really close, and unfortunately looks like both parties haven't really quite found an agreement just yet. So we've been preparing for this. We have been preparing our clients for this scenario, because we know Brexit has been coming for the past 3 years, and unfortunately we've prepared for the worst case scenario, which is coming up. Then there might be no trade deal at the end. What does that mean? It means that actually we'll be trading back on between the UK, trade between the UK and the EU will shift back to really basic World Trade Organization rules, with tariffs, potential quotas applying as well. So the idea behind finding a trade deal is to make it cheaper to trade between the EU and the UK. That's what businesses are hoping for. But unfortunately, we can't really guarantee this as we speak. So let's just start maybe by talking about movement of goods between the UK and the EU. So if you are currently trading between the UK and the EU, perhaps you're moving stock, perhaps you're selling directly to customers, maybe you've got a warehouse in the UK and you are currently doing distant sales from the UK to EU-based consumers. As we speak, currently these supplies are treated as intra-community supplies, and your distant sales are treated under the distant selling regime of the EU. But that will change from the 1st of January 2021, because from this date, your supplies made from the UK into the EU or from the EU into the UK will be treated as imports or exports. There is an exception with Northern Ireland. And again, maybe this is something you've heard about. There's been so many talks about Northern Ireland in recent months, because because of the specific status that Northern Ireland has. We're going to be covering Northern Ireland later on in the discussion, because we received so many questions about this territory. So that is one exception. So of course, the way you're going to be accounting VAT will be different because your supplies will no longer be intra-EU supplies. They will become import and exports with additional customs requirements, well, rather new customs requirements. So let's maybe start by looking at what you need to think about and what you need to be prepared for the end of the transition period. These are questions we receive every day at Simply VAT. In the past trainings we've held as well with our partners, the Institute of Exports, etc. This is something that comes up all the time. So let's just start by looking at key things you need to do already if you haven't just yet. So the first thing, and again, a question we receive continuously, is about getting an EIR number. What is an EIR number? An EIR number is a number that you need to be identified for customs purposes. So today you may have already a GB EIR number if you are based in the UK, for example, but you might not have an EIR number for EU custom purposes. So the first thing you need to really think about, if you haven't just yet, is to obtain an EU EIR number if you haven't got one yet and you're planning to move goods into the EU after the 1st of January 2021. The same thing applies if you currently only have an EU EIR number and you haven't got a GB one. So basically, think about moving goods, think about EIR numbers. We can help you get your EIR number if you haven't, if you don't know where to start. This is a service we offer at Simply VAT. And that's going to be essential if you want to start moving your goods at the end of the transition period, as I've just said. Another really interesting news that came out recently as well from the government is that you will also need a Northern Irish EIR number if you import goods into Northern Ireland after the end of the transition period. So that's going to be an additional EIR number. So you might have 3 in total, basically. So again, this is something we can help you with if you know you're going to need one. Otherwise, you need to contact the UK government and the HMRC as soon as possible, and they can help you do that. So EIR number is a big one. One thing to bear in mind as well is that we've got holiday season coming. We're still hit by a global pandemic, and it means that tax authorities are actually, they're facing quite a few delays in dealing with applications. So don't leave this to the last minute. And to be honest, we are almost mid-December, so it's really something to crack on with, if I may say, because applications can take some time to be dealt with. So we've been trying to really submit applications as soon as possible and to keep our customers updated on the status of their applications as well. But again, if you need help with this, get in touch with us later on and we'll be happy to help.
If I can just jump in, Louise, for the EIR numbers, yeah, we've been seeing, so it just to give people a bit of context, in France, they're going to be issuing the EIR numbers, but they're issuing them on January 1st. So you should get an email to you from the French tax authorities giving you your EIR number on the 1st of January, so you can use that on your import documents. So just keep that in mind. Germany, if you're looking to get an EIR number in Germany, you know, they haven't been processing them that quickly. They're doing their best at the German customs authorities. We had a colleague just speak to them today, but you know, we can't guarantee that we're going to be able to get them in. It all comes down to the tax authorities. So make sure that if you are choosing Germany, again, try and get it done as soon as possible. The one that we have been seeing, you know, quick EIR applications getting turned over is actually in the Netherlands. So the Netherlands has been churning them out quite quickly. Now, a big thing to note is you can't use 2 EIR numbers at the same time. So if you are, you know, applying for this Dutch EIR number and getting it, make sure that you're not using the Dutch EIR number or any secondary EIR number until January 1st, as you can only use one EIR number number at one point in time.
Yeah, that's a really good point, Alex. Yeah, just to clarify that, as Alex has just said, in the EU you can only have a single EORI number. You don't need an EORI number in every country where you import. You get a single EORI number. You link your VAT numbers to it, and that's it. You don't need several. And how to know where to obtain your EORI number? Well, the guidance from the European Commission is that you should apply for an EORI number in the country where you will first lodge a custom declaration. So again, it's something to plan and to think about before applying. You need to know where you're going to first make a custom declaration. So perhaps you will first move goods into France, for example. So you will need to apply in France. So really important as well.
I'm just going to pop up a question on the screen here from Pete Chapman. So he's asking to clarify, any EU EORI number is only required if UK sellers use DDP. Do you want to clarify when you would need an EU EORI number? DDP, importing DDP is definitely one of the times.
Yeah.
But do you want to explain a bit further?
Yeah, absolutely. No, you should. I mean, you should need an EORI number whenever you lodge a custom declaration. So whenever you have to make a custom declarations and your importer of record of the goods, that's when you need an EORI number for custom purposes. So if you have custom obligations, you need an EORI number to do that, basically.
Perfect. Thank you.
Okay, so that's for EORI numbers.
I think if we go into postponed accounting,
Yes, sure. Postponed accounting. Yeah, that's a good one. So again, if we look at what things you need to think about before the end of the transition period, there's a new scheme which is being launched by the government, which is called postponed VAT accounting. This is a scheme which will start from the 1st of January 2021. And it's basically for all businesses registered for VAT in the UK to be able to account for your import VAT in your VAT return rather than upfront at the border. So it just means that basically you're no longer paying your import VAT when your goods arrive at the border, but you can automatically account for the VAT in your VAT return. This is, so again, for all VAT registered businesses in the UK, you don't need to apply for it. The government has been quite clear that this is automatic. So that will be really interesting for cash flow, basically. So the reason why they are launching this scheme is to mitigate the impact on your cash flow. You're suddenly having to pay import VAT, which you didn't have to before when moving your goods. So that's a way to mitigate this impact. This is also for all imports. It's not just from imports from the EU. It's for all imports from overseas into the UK. So that's going to be a really interesting one to look forward to. That's really marketplaces changes. That's such a big topic. We are receiving so many questions about this big changes at the moment. So you may have received some communication from marketplaces such as Amazon, for example. If you're selling on Amazon, there are some big changes coming up in the UK from the 1st of January 2021. It's been announced by the government, and as a result, Amazon has also been communicating on these changes. So the changes relate to the VAT treatment of overseas goods sold to GB consumers on a marketplace. So I'm going to repeat this. So overseas goods from overseas, not from the UK, which are sold on a marketplace to UK consumers. There are changes coming to the way VAT will be accounted for in these cases. There's two scenarios that you need to look for. As a seller, you need to identify whether this applies to you or not. The first one is if your goods are delivered from overseas in consignments up to £135. So you've got goods stored in an inventory outside of the UK, and you sell them on a marketplace in consignments, so in a parcel, up to £135. If this applies to you, then the marketplace such as Amazon or eBay, will be responsible for charging, collecting, and remitting the VAT due on these goods directly to HMRC. It will no longer be your responsibility to account for the VAT on those supplies, which could be quite interesting for you. It just relieves some admin burden for sellers, for overseas sellers. Why is the UK doing this? Well, basically, they want to make sure that overseas sellers, or rather goods from imported into the UK, are being charged with VAT. And this is to create a level playing field for UK businesses, domestic businesses, and overseas businesses. This goes hand in hand with the low value consignment relief. You may have heard of this. A low value consignment relief is a VAT relief for low value goods. Today it is set at £15 in the UK. And it means that goods being imported into the UK with a value up to £15 can be imported VAT-free. They are VAT exempt. There's no VAT due, which is great for consumers because it means that today, if I buy a mobile phone case from an overseas seller, then I might not pay VAT on this. So it's cheaper for me. It's great. I'm quite happy with that. But this is not really fair for a local British business on the high street where I would go in and buy a mobile case, because then this business will need to be charging VAT and might not be as competitive as an online business. So this is what the government is. This is why the government is scrapping this measure. So from the 1st of January 2021, VAT will have to be paid on all items sold in the UK from overseas. So that's the first scenario to look for. The second one, when the marketplace will be charging, collecting, and remitting the VAT due on a sale of a good, will be when your goods are located in the UK already, but you are an overseas seller. So, and this is regardless of the value. So let's take an example. For example, I'm a French business. I am based in France, but I hold stock in the UK in an inventory, perhaps in Amazon's fulfillment center in the UK. So I am an overseas business based in France, not in the UK. I hold stock in the UK and I sell on Amazon UK. Well, in this scenario, Amazon will be responsible for charging the UK VAT, collecting it from customers, and remitting it to HMRC on my behalf. It means that as a French business, I don't have to worry about giving the VAT to HMRC. However, so this is great. I don't have to worry about this. However, I still need a VAT registration. That's when it gets a bit complex, but I still need the VAT registration in the UK because I hold stock. And if you have followed our training in the past and our previous webinars, this is something we always say to everyone is if you hold stock, then that triggers a VAT registration requirement. So I will still need a VAT registration in the UK because I hold stock. And also because I have a VAT registration, I can reclaim the import VAT, which I have incurred when I have moved my stock from France or from wherever into the UK, into Amazon fulfillment center. So this is an interesting one. Yeah, I know it gets a bit complex. So again, if you have questions about this later on, if you're not sure whether this applies to you or not, you can get in touch and we'll be happy to really look at your setup. Because yeah, it's a massive change in the way VAT is being collected and remitted to HMRC. But I'm just going to repeat these two scenarios. You need to you can take some notes if you want, if you're not sure. But two scenarios under which Amazon or eBay will be collecting VAT on your behalf. First one is your goods are delivered from overseas in consignment up to £135 and they are sold on the marketplace. Second scenario, your goods are located in the UK at the time of the sale, but you are an overseas seller. Second scenario, and this is regardless of the value. Yeah, so that's for the big changes. I think I've covered most of this about it. We've covered the low value consignment relief. So remember, from the 1st of January, you're going to have to charge VAT on your low value items. If you're selling on your own website, really important, this doesn't apply to you, the changes I've just mentioned. Of course, these are changes if you sell on the marketplace. If you're selling on your own website, you need to charge VAT from the first pound you sell to consumers. That will be due from the first pound. So you potentially, if you're selling DDP or in other Incoterms, where you're importer of record, you're going to have to register for VAT and remit the VAT to HMRC anyway.
Well, I just wanted to chop in here. I have posted a link in the chat box there, and this is actually from Amazon, and it's their guidelines on actually how they're treating like these new changes. So if you wanted an exact how Amazon is implementing it, you can check it out here. And the other thing to note is that when you're setting your prices, you still need to set your prices as the gross prices. Amazon have stated, when you kind of look through this document here, they've stated that they are going to be deducting the VAT from the gross prices that you set. So essentially, they'll be keeping some money instead of paying you out all of it for you to then pay on to the tax authorities. They will then be keeping their fees along with the VAT, and in order to pay it onwards. So make sure you make sure to include the VAT in your margins when you set your prices. Otherwise, you can really be impacting your profit. So yeah, just a big highlight there, and it's popped into the chat box if you want to refer back to it. Not a problem.
Can I just say, Alex, just about, because I know this is something we've been asked so many times by sellers. They're worried, how is that going to work? If I import my goods into a fulfillment center in the UK, how am I going to recover the VAT, reclaim the VAT that I've incurred if I'm no longer responsible for the VAT on the sales? How does it work? Well, actually, this is why you will still need a VAT registration in the UK. So you're moving your goods into the fulfillment center from overseas. In the UK, you keep your VAT registration. You're going to need it anyway. You're going to have to keep it. And what will happen is that you will be deemed to be making a zero-rated supply to the marketplace. So you will be making the supply to the marketplace of your goods without VAT, and then the marketplace will be deemed to be the seller, if I may say, the seller of the goods to the consumers. What happens then? So you're keeping your VAT registration, and in your VAT return, under the normal VAT deduction rules, you will be able to deduct the import VAT that you've incurred when you've moved your goods across the border into the UK. You've incurred import VAT and you've cleared the goods through customs at that point. Well, you can still recover this. You can still reclaim this with the normal current rules. So that's why you need to hold on to your VAT registration in the UK, if that's the case. And of course, because you have a VAT registration, you will still need to submit periodic VAT returns as well.
Perfect. Thanks, Louise. So I'm going to go jump into some of the questions now that we've been getting in. So thanks for posting. If you have them more, we'll keep working our way down the list. So the first one, which was actually posted just before we even started. So can you tell me if the EU distance selling rules will still apply if we as a UK company import and hold stock in, say, the Netherlands and fulfill orders to consumers or customers in other EU countries from the stock held in the Netherlands? So are those distance selling thresholds applied, one from the UK and then two from stock held maybe within Europe?
Yes, this should still apply up until July next year. There are changes coming up again with the distance selling regime in July. This is all again being changed. It's not quite the topic of today's, but yes, if you're holding stock, you will still need to be monitoring the thresholds in different EU member states, as you are maybe currently doing if you're based overseas. The change here, however, I just want to highlight this, is that, of course, if you are doing distance sales from the UK, indirectly into the rest of the EU. Of course, this doesn't go under the decent selling regime. There's no threshold applicable for overseas seller. If you're not holding stock, there's no threshold applicable. You just charge VAT and potentially register for VAT from the first sale.
Perfect, thank you. I'm just kind of working through. There's some that are quite specific in here. So I'm just going to work through a few. This one here. Is there anything else we need when sending goods to the UK? Do I need to register as a UK company for selling goods to the UK, for example? I think this is a question that we've been getting a lot is, after post-Brexit, do we need to be opening up an EU entity or vice versa, a UK entity to continue to trade? So Louise, if you don't mind chiming in and just explaining if that's necessary.
No, you shouldn't need, if you, so I don't know where you're based, but you shouldn't need to register a UK company, and what I understand from registering as a UK company, I understand as an actual entity, a branch, a fixed establishment. If you're sending goods to the UK, you don't need to set up a company there. Whether you want to do this, it depends if it makes sense for your business, to be honest. For example, same with the question we always get is, should I set up an EU entity? If that's kind of doesn't make sense for your business to do that, of course, there's a lot of benefits in doing this, having an EU entity, but it all depends if it makes sense for your business. But if you're just moving goods into the UK, you don't need to register a company there. You need a VAT number, which is different from an actual company registration, if that makes sense, with company's house and stuff like that. So yeah, don't worry about it. I wouldn't worry about it, but perhaps it makes sense for your business to do that.
Perfect. Here's one. Now we had our other webinar that we hosted on Tuesday, and that was kind of talking all about MOS. And how businesses should be treating any supplies of digital services or digital products. But I mean, Louise, if you don't mind just giving a bit of a recap for those who maybe weren't here on Tuesday, they didn't tune in. If you want to chime into it, we will have it available on our YouTube channel. So you can check through our videos after. But if you don't mind giving a little bit of an overview for Dave here, that would be great.
Oh, yes, definitely. Yes, MOS is a big change as well. So I'm aware that some of you may have never heard of MOS. So MOS stands for Mini One-Stop Shop. The MOS scheme is an EU-wide scheme, which is available in every single EU member state, including the UK up until the end of this year. So what is the MOS for? The MOS is to report the VAT, to report an account and pay the VAT due on the supply of digital services that you make to consumers. It's only B2C. You cannot report any VAT on the B2B supplies. It's just B2C. And digital supplies range from digital patterns, music streaming, online gaming, anything in a streaming format, a PDF format, etc. Software as well is a big one. So with the MOS, with the end, as I said, the UK, of course, is currently part of the MOS scheme because it is part of the single market and customs union, part of the EU VAT rules. This will change from the 1st of January 2021. It's a big change because the your last UK MOS return will be for Q4 2020, and you will have to submit it by the deadline, which is the 20th of January 2021. It's the normal deadline, but you'll still have to submit it by this normal deadline. The government has confirmed that you will still be able to access your MOS returns up until, I believe, the end of 2024. You will still need to, I will have to check that exactly. I can check now, actually, on our blog post, which we have. We have a blog post dedicated to MOS as well, which maybe we can share the link.
Oh yeah, I can get that out.
Yeah, that would be, because we've got all the deadlines in there. There's a few different deadlines, but basically what you need to know about is that if you are a UK business and you're currently reporting the VAT on the EU supplies of digital services, so for example, you're a UK business and you sell knitting patterns, for example, and you've got EU consumers. Up until the end of December, you would have been able to use the Union MOS, which is the scheme for EU-based businesses. You have to deregister from this scheme and you have to jump on the other scheme which is available. This other scheme is called non-Union MOS. And it is for non-EU businesses. So as a UK business, you will have to use this scheme. You will have no choice. So you deregister from the current MOS, you file what you need to file until January, and then you, as soon as possible, you register on the non-Union MOS in the country you choose, because you will no longer be based in the EU. So you can actually choose where you want to register for MOS, which is quite convenient. I would say think about language barriers there. So maybe as a UK business, perhaps Ireland makes sense because the MOS scheme will be in English, for example. So details like this that you need to think about. The deadline to do that is the 10th day of the month following your first supply. So what does it mean? Let's take an example. Again, I am a UK business. I sell knitting patterns and I sell a pattern to a French customer on the 1st of January 2021. Well, I'm gonna have until the 10th of the following month to register for the non-union MOS. It means that the deadline for me to register on the non-union MOS will be the 10th of February, and I can choose where I want to register. So maybe I want to register in France because I speak French, for example. I can choose. The deadlines, again, I believe they are also the 20th of the following month of every quarter. So it's also on a quarterly basis. Every quarter you file your MOS returns, and I think the deadline is also the 20th. What else? Yeah, process, form, timescales, penalties. Penalties would apply as well. There's something to look for as well. If you're not familiar with the MOS scheme, the tax authorities are quite strict with the deadlines. What do I mean by this? It means that if you keep missing your deadlines, they're going to kick you out of the scheme because, yeah, that's just how it is. So you're going to be put as in a kind of quarantine period, which again sounds super familiar these days. But the quarantine period is a set of time, an amount of time of, I think it's a few months, it might even be 1 year or 2 years, it's quite a long time, where you cannot access the MOS scheme. So it's really important that you comply with the deadlines, because if you keep missing them, they're going to kick you out. And what does it mean? It means that you will need to register for VAT in every single member state where you supply your digital services. So it can be really burdensome, as you can imagine. So really important, keeping the deadlines in mind, choosing where you want to register for the non-union scheme, and charging the local VAT rates, really important as well. So the VAT rates can differ for digital services. So you're going to have to apply the VAT rate wherever your consumers are based. So if you're selling to Spanish customers, to French customers, to Irish customers, you need to keep an eye on the VAT rates. This doesn't change whether we are part of the EU or we've exited the EU. You will still be required to comply with the local VAT rates. And they can be different for ebooks, for the streaming, for patterns. They can be different. So do check the VAT rates. One last thing on MOS. What can we say on MOS? So have I answered the whole question? So yes, selling B2C, need to register. Yes, so I would say the businesses you support, they should look at registering for the non-union MOS. And which one? Again, it's your choice. As a non-EU business, which we will be as UK businesses, you can choose where you want to register, what makes sense. Again, I say language can make sense, for example. And then this is done online on the portal. You need to contact the tax authorities directly and just go through the process. They will ask, standard information. You go through the process online, you register, and then you're all ready. And I'm just going to add one thing. If you're, for example, if you're based in the US or if you're based anywhere else, Australia, and you are currently selling digital supplies in the EU, and you're currently on the MOS, another thing to think about is that from the 1st of January 2021, the supplies you make in the UK, you cannot report them on MOS anymore because the UK will have left the MOS scheme. So instead, you will need to register for VAT directly as a normal VAT registration, and then you will just submit your VAT through your normal periodic UK VAT return. The government hasn't mentioned anything about a new replacement of the MOS scheme in the UK, for example. So digital supplies will have to be accounted for in your VAT return, in your normal UK VAT return.
Perfect. I'm going to skip on to Amanda here. Amanda tuned into our webinar on Tuesday. So this is a kind of a two-part question, but I kind of skipped the first bit because it was just summarizing that she was attended on Tuesday and that they had a Belgium office, but it was actually Denmark. But I think that kind of the first bit doesn't really matter because she's really kind of asking, does she need an EIR number for her product, which is a digital app? Do you want to explain that, Louise?
Sure. So digital app, that would fall, we would again need to really look at what kind of, how do you actually sell the product, etc. But from the information I can see there, if you tell me it's a digital app, then that would go, it's a digital supply, it's an online service. And you're based in the UK, and if you are selling, Amanda, if you are selling to EU consumers, you could use the non-union MOS to report the VAT due. So that's something that would be, looks like it could be applicable to you. If it's digital app, I am a French customer, I want to buy your app on my mobile phone here in France. I will buy it from you. You will need to charge French VAT because I am based in France. So you need to charge the VAT where your consumers are based. So if I buy your app in France, you're going to have to look at, I have a French customer buying my app. I need to charge French VAT and I need to register for VAT in France. That can be quite burdensome. So instead, just use the non-union MOS to charge VAT to collect it. So have a look at the non-union MOS because that would be that sounds like it would be applicable to you.
Yeah, and the EIR is really only for the physical products. So don't worry about the EIR application, Amanda, unless you're selling a physical product. Philip here asks about the EIR number, and as he currently understands it, it's the VAT number with 3 zeros on the end, which is true in the UK here, but you also need to make sure that you apply for it through HMRC. So make sure that you are, you can check this. If you Google in EIR checker, just pop that in Google and it will be one of the first options, a Europa type website. And you can actually put in your VAT number and the 3 zeros. Now, again, this only works for the UK. This isn't for any other EU countries. But you can just pop that in just to see if you have a valid GB EIR number. And then, you'll be able to tell and see if you need to register for a GB EIR number in order to continue to import after the 1st of January. So just have a little Google there, or I can, whilst Louise is answering the next question, I can have a quick search and pop the link in the description there for you if you want to check your EIR number and make sure it's valid. Okay, so moving on to a few other questions here. So let's see. We have a question about how Amazon is going to handle the flat rate scheme. If this guy Christoph is on the flat rate scheme. Is Amazon going to be applying the flat rate scheme? How does the flat rate scheme work with the new marketplace changes?
This is a really good question, but actually, because if Amazon is collecting VAT on your behalf, you don't really have to worry about this. They shouldn't be. There isn't any changes to the flat rate scheme. The only change here is whether you are charging VAT or not. And if your supplies are eligible, you're not charging VAT and you're not collecting it, so you don't really have to worry about it. But there is no change to the flat rate scheme that has been announced by the government from the 1st of January. So if you're on the scheme, you can stay on the scheme. But the only change is that you will not have no VAT to charge, basically, in under certain scenario that we've covered earlier. So I hope that answers the question.
And also on the flat rate scheme, you can't reclaim any import VAT. So yeah, you really wouldn't be benefiting off of, the new marketplace changes. So there might not be much of a point. But just going back, I've just found the link and it's down here in the chat box as well. If you want to check your EU Eir number, I've popped it into the chat box for you guys to have a quick look. I'm just going to go ahead. Sorry, I can hear a bit of feedback on Louise's side. So apologies for that. So we have been asked a question, and I didn't mean to skip over you, Lee, but how Barney described it here was a bit more general than your question. So let's say you're a UK business and you are using a supplier in the EU, and you're moving goods over into Germany, for example. Right now, the B2B transaction would be covered under the reverse charge mechanism. So the VAT invoices would be essentially zero rated. But what happens after the end of the EU transition period, Louise, for the B2B transactions going from the UK to the EU if you're purchasing from a supplier in the EU? And what happens also maybe if the supplies stay in the EU? What happens in that case?
So let me just read this again. So we buy from suppliers invoicing us in the UK, but we're delivering to our... so I think it depends where the goods are coming from. So if your goods are remaining the EU, then that remains an intra-EU movement of goods. I'm assuming you're holding stock in the EU.
Yeah, in Germany.
So you're holding stock in Germany, and then we have we buy from suppliers invoicing us in the UK, but delivering to if the goods are already located in the EU when you get them to your German warehouse, then that remains an intra-EU movement of goods. But if the goods are coming from outside of the EU, for example, which I'm not quite sure where they're coming from, the goods, then that would be an import, from the EU. So I'm not sure that really answers your questions, but I think I would need to kind of look at where the goods are coming from in this scenario.
For these sorts of questions, it's more a case-by-case scenario. So in that case, it's best just to reach out to us and check.
Yeah.
But, I mean, if you're keeping your goods in the EU.
Sorry. Yeah, I mean, the invoicing shouldn't really change, but it's just whether, you're charging VAT or not. But yeah, it'd be interesting, to kind of have a bit more background on this. I wouldn't want to give you a wrong advice on this without having the whole picture of where your goods come from, etc.
So Yeah, so they're saying goods are shipping from one EU country to another. So if your supplier is based in the EU and you're moving your goods to your warehouse in the EU in Germany, I mean it depends on the terms and how you're shipping and where you take ownership of the goods. But if your goods are actually going to become a taxable supply from, say, a German warehouse, for example, and that's where you're going to be shipping all your goods, you'll need to be VAT registered in Germany. And then your invoice, you should make sure that you're using your German VAT ID in that case. But again, I don't want to say that this is advice in any sense of the way, because we just need to, it's a very case-by-case specific information, especially in B2B transactions. So if you do have those sorts of questions, I urge you to kind of get in touch in that case, because we don't want to go into too much detail whilst there's lots of other businesses listening. So going into a bit more general, so they're a UK business and they hold stock in the UK. What happens when you're sending goods now to the EU? Because we're no longer covered under the distance selling rules. What happens with the tax?
Really, yeah, that's a really interesting one. So you will be expected to charge VAT where your consumers are based, because you will be importing. So again, as you've rightly said, as we speak, these are distance sales. Moving forward with Brexit, these will become imports. So you will need to be charging VAT where your consumers are located. So if you are selling from your stock in the UK to French consumers, you're going to have to charge French VAT. If you're selling to Spanish customers, you're going to have to charge Spanish VAT. So where the consumers are located, where the goods arrive, basically. And who are you paying VAT to? To the local tax authorities. Yes, there will be, this will probably be the topic of another webinar we'll be doing in the new year, but there will be simplifications coming up in the EU from July 2021, where you, in this scenario, you will be able to use an online scheme to report the VAT in a single place, instead of having to register everywhere where you sell to EU consumers. So that could be interesting for you. But this is only from July. What do you do in the meantime is that you charge VAT where your consumers are located, so where the transport of your goods ends, and you pay VAT to the local tax authorities, so the French tax authorities or the Spanish tax authorities, wherever you're selling, basically.
Perfect. Thanks, Louise. And this one's, I think it's going to touch on kind of the Northern Irish Protocol and how goods are actually treated going from Northern Ireland into Ireland. This company here has registrations in both Ireland and the UK, but you mentioned earlier about the Northern Irish Protocol and the NI Eir Number. Is there a separate registration that they will need when shipping from Northern Ireland? How does that work?
Yes, Northern Ireland is a really interesting topic, and it's treated completely differently for goods than the rest of the UK. So basically, what you need to remember about Northern Ireland: movement of goods, and I'm talking only about goods, not digital supplies, not services, just physical goods. Movement of goods between Northern Ireland and the rest of the EU, including the Republic of Ireland, will continue to be treated as intra-community movement of goods. So you can kind of think about it as Northern Ireland being still part of the EU, just for goods purposes. Really important. It's only for goods. It's not for services. So Northern Ireland will be following two VAT systems, the UK one for services and the EU one for goods. So in your case, for example, when you are moving your goods from Northern Ireland, and let's say you're doing distance sales, for example, to EU consumers from Northern Ireland into the rest of the EU, basically nothing really changes for the VAT for your goods. You're still reporting the VAT on the supplies. and this is still considered as part of the EU. So that's when there's a big change. The difference here is that movement of goods between the UK, the rest of the UK, so GB, and Northern Ireland will instead be considered as import and export. So that's a big difference. With the VAT number as well, because Northern Ireland will be following these dual VAT systems, both the EU and the UK one, the government has just released some guidance on this, and really important, if you have operations in Northern Ireland, if you hold stock, you need to contact HMRC and let them know, because they will be able to confirm how you can treat this. But there's also a really good scheme which has been launched, which is called Trader Support Service. And this is a scheme that the government has just launched a few weeks ago for businesses with operations in Northern Ireland. And if you sign up to it, so I would advise that you, just sign up to it, really, because they will basically handle, from what I could understand, they will handle the customs formalities on your behalf if you move goods between the rest of the UK and Northern Ireland. So it's called Trader Support Service. So if you have operations in Northern Ireland, think about looking this up, because that's really good, really useful. With Northern Ireland, another thing to again remember is that there is a new kind of VAT number which has been agreed on, which will start with XI. So as you know, because Northern Ireland will be subject to two VAT systems, essentially, we need to be able to differentiate this and the transactions. So what the government has just announced is that if you have operations in Northern Ireland, if you're selling goods, if you're making acquisitions from the rest of the EU, for example, of goods, if you have EU suppliers, you can give them your Northern Irish VAT number. How do you get a Northern Irish VAT number? Well, you don't need to apply for a different VAT number. What HMRC has announced is that you simply change the GB at the start of your number, of your current VAT number, and you replace it by the prefix XI. This is the same for EORI number. EORI number will start with XI as well. This is the code which has been agreed for Northern Ireland. So that's really, what to remember with Northern Ireland. Movement of goods with the rest of the EU don't change. It's still the same. You still need to account for the VAT in the same way. There's no changes to that. Have a look at the Trader Support Service, because you might benefit from guidance. They have trainings, they have online trainings, they have webinars, and also they said that they will handle some custom formalities on behalf of traders, which would be really helpful. So I hope this helps.
I think that's quite useful, Louise. So thank you. Now,
No
I have another question here. This one, it's not supposed to say overview, it's supposed to say overseas. They corrected themselves. So if an overseas seller has pre-sold goods and is sending goods into the UK for fulfillment, the consignment is over £135 and VAT is collected on import, will they still need to VAT register in the UK? And remember, they're holding stock for fulfillment. Yeah. So what do you think?
That is such a good question. So with so what I understand from this question, so you've already sold your goods into a fulfillment center in the UK, right? So you've already imported your goods into a fulfillment center based in the UK. So it means that you've already cleared the goods through customs. You've already paid the import VAT. So actually, in this case, the consignment value doesn't matter. It doesn't matter because you've moved your goods. The consignment value only matters if you're selling through a marketplace directly to consumers through a marketplace. But in this case, you've moved your goods into a fulfillment center. So what you're going to do in this case is that you will register for VAT if you're not already. You move the goods through customs. You pay the import VAT at customs. or on the postponed VAT accounting scheme that we mentioned earlier. You will be able to use that as well. And your goods are in your fulfillment center in the UK. So from that point, you don't actually need to worry about the value of the consignment. It's not really relevant in this case. So VAT will still be collected at import, as you've rightly said. And yeah, keep your VAT number because you're going to need to reclaim the import VAT. So keep your VAT number in this case. Oh, so yeah, I think I've answered most of the questions. Yeah.
Okay. We only have time for a few more questions here. So first, this next question here is talking about invoicing. So if you're sending invoices from the UK, so as a UK business, to an EU private customer, you will apply VAT based on the country of supply. And B2B UK to EU 0 rate if customer has an EU VAT registration. Do you mind clarifying this?
Yes. So with the B2C supply, you will invoice with VAT where your consumers are based, because if you're importing, that's where VAT will be due. So you invoice where your consumers are based. With B2B from UK to EU, indeed, if your customer is providing you with a VAT number, they should be able to reverse charge the VAT there. So you shouldn't need to register for VAT. And the customer will account for the VAT.
One big thing, if you are sending to private customers in the EU and you're not VAT registered there, so say you're sending in under DAP Incoterms, so you're making the end customer the importer of record, because you're not VAT registered, you should not be charging VAT on your invoices. So it will be an export from the UK, so 0 rated for VAT purposes, and then the end customer is going to be the importer of record, and they will be the one accounting for the VAT as it goes through customs. But so you should only be applying the place of supply, the country of supply, if you're importing in under DDP Incoterms and you have your VAT registration, you're putting your EU Eir number on it, making sure that you are seen as the owner of the goods as they go through. So I just wanted to clarify that. Okay, let's see if we have time for one more here. So another one from Pete. So can couriers pay the import VAT on a UK company's behalf and then charge them back to save the UK company having to register for VAT in all member states that they export to?
I think there is a way to do that, but that would be something that I think you should check if this is something that might make sense for you. I would say check directly with your courier, your freight forwarder, your courier, postal operator, courier operator, if they would be happy to do that. The only thing with this option is thinking about your customer experience. If they want to return the goods to you, how easy it would get. They would have potentially paid VAT as well. I'm talking about your end consumers. So how returning the goods, getting the VAT back, etc., might perhaps be a bit complicated. I'm not sure, but I think that's something to check with your. I believe there is a possibility to do that if it makes sense for you, but do check with your couriers if they would be happy to do so.
Perfect. So that's all the time we have for today. So thanks so much, Louise, for coming on and answering everyone's questions, and thanks for engaging and asking your questions. Now, if you do have more specific, I saw there was a few specific questions in there. Now, feel free to reach out to us directly to have those specific questions answered, so that we want to make sure that we are giving out the correct information on these webinars. So sometimes it can be a bit tricky when we just only see little glimpses of your company. So if you have your questions ready, please send them over to one of our team members. You can reach out to here to help at simplyvat.com. Or you can, you can follow us on any social media. Everything is at Simply VAT, or you can subscribe to our YouTube channel because we're always posting new content about, any kind of changes in VAT. And you know what, right now, and I know Louise gets really excited about it, but the new changes that are coming with the EU VAT reform, it's so prevalent to businesses these days. So stay tuned, stay in touch, and if you have questions, make sure you reach out, because if you prepare now, you're only going to succeed as of January 1st. So we hope that you can, you have a prosperous business going into 2021. So thanks everyone for joining, and thanks Louise.
Thanks Alex. Thanks everyone.
Thanks. Bye.